there has been an important update that every Social Security recipient in the United States needs to understand. Right now, federal authorities have officially confirmed adjustments to how Social Security payment dates are being handled. And this change is already creating confusion among millions of seniors. If you rely on retirement benefits, SSDI, SSI, or any related federal support, this update directly affects you. The government has approved new scheduling adjustments that may shift when your monthly deposit arrives. And while the total benefit amount remains protected, the timing of payments is being modified under newly confirmed administrative rules. For many older adults, Social Security is not just a supplement. It is the primary source of income used to pay rent, utilities, groceries, medications, insurance, and everyday essentials. Even a small shift in payment timing can cause stress and disrupt carefully planned monthly budgets. That is why this update is so important. The new law focuses on administrative scheduling reforms, banking alignment adjustments, and internal modernization efforts that federal agencies have been working on for some time. These changes are being described as efficiency improvements designed to reduce processing delays, prevent fraud, and better coordinate federal payment systems with modern banking timelines. To understand what is happening, it helps to first review how Social Security payment dates have traditionally worked. Retirement and disability payments are usually distributed based on the beneficiary's birth date. Those born between the 1st and 10th typically receive payment on the second Wednesday of the month. Those born between the 11th and 20th receive payment on the third Wednesday. Those born between the 21st and 31st receive payment on the fourth Wednesday. Supplemental security income is generally paid on the first of each month unless that date falls on a weekend or federal holiday, in which case payments are issued on the preceding business day. The newly approved adjustments do not eliminate this structure entirely, but they modify how certain payment cycles are processed, especially when federal holidays, banking processing windows, and electronic transfer timelines overlap. Federal agencies have confirmed that updated payment sequencing systems are being implemented to streamline deposits and reduce overlapping payment congestion that has historically occurred during months with holidays. These changes may result in certain beneficiaries receiving their payments slightly earlier or slightly later than they are accustomed to, depending on how the calendar falls. It is important to understand that this change is not a reduction in benefits. The monthly payment amounts remain governed by cost of living adjustments and eligibility rules that have already been confirmed. The difference lies in timing. For seniors living on fixed incomes, timing matters significantly. Many households structure bill payments around expected deposit dates. Mortgage payments, rent deadlines, auto-pay utilities, and prescription refill schedules are often carefully aligned with Social Security deposits. When those deposits shift by even a few days, it can create temporary financial strain. Federal authorities have explained that this new law was passed to modernize payment operations and prevent processing bottlenecks. Over the past several years, the Social Security system has faced increased administrative pressure due to rising beneficiary counts, cybersecurity concerns, and expanded electronic banking requirements. By adjusting internal payment scheduling rules, officials aim to create more predictable deposit flows and reduce the risk of last-minute adjustments during holiday months. Another factor contributing to this update involves banking industry changes. Many banks now operate with advanced fraud detection systems and automated transaction screening. While this protects beneficiaries, it sometimes delays large deposit batches when millions of payments are processed simultaneously. The new scheduling framework spreads out certain high-volume payment clusters to avoid congestion within the electronic funds transfer network. This adjustment is designed to enhance payment reliability rather than disrupt it. Seniors receiving supplemental security income should pay particular attention to months when the first falls on a weekend or federal holiday. Under the updated system, payment dates may appear slightly different compared to previous years due to internal processing shifts. While beneficiaries will still receive funds on the preceding business day when required, the official calendar issued by federal agencies may look different because of back-end coordination changes. Retirees who began receiving benefits before May 1997 also follow a slightly different payment structure, typically receiving payments on the third of the month. Under the new law, alignment adjustments may occasionally move deposits by one business day, depending on national holiday schedules. This does not mean benefits are delayed indefinitely. It reflects technical coordination between the Treasury Department's payment processing system and financial institutions nationwide. The government has emphasized that beneficiaries do not need to reapply, re-enroll, or update personal information solely because of this change. Existing direct deposit arrangements remain valid. Paper check recipients will continue receiving mailed payments according to the updated distribution schedule, although officials continue encouraging electronic deposit enrollment for faster and more secure access to funds. Cost of living adjustments remain separate from this law. Each year, benefits are recalculated based on inflation metrics to protect purchasing power. The payment date change does not affect COLA percentages or eligibility thresholds. However, when payment dates shift within a calendar month, beneficiaries may notice two deposits appearing within the same month during certain rare scheduling circumstances. This is not a bonus payment, but rather a calendar alignment adjustment. For seniors managing tight monthly budgets, preparation is essential. Reviewing the updated official payment calendar once it is released ensures that rent and bill deadlines can be adjusted if necessary. Communicating with landlords or utility providers ahead of time helps prevent misunderstandings during transition months. Many financial institutions offer balance alerts and deposit notifications that can provide peace of mind when payment timing changes. Another key point involves Medicare premium deductions. For many retirees, Medicare Part B premiums are automatically deducted from Social Security payments. A shift in deposit timing does not change the premium amount, but beneficiaries may see deduction timing aligned differently within monthly bank statements. Understanding this can prevent confusion when reviewing account activity. The broader goal of this new law is long-term system stability. With millions of Americans entering retirement age each year, the Social Security Administration has been modernizing its infrastructure to manage increased workload. Payment scheduling reform is one component of that modernization effort. Officials describe it as proactive management rather than reactive correction. For individuals receiving Social Security disability insurance, payment timing follows the same birth date-based structure as retirement benefits. The updated scheduling adjustments apply equally. Those managing medical expenses or recurring therapy appointments should verify the new deposit timeline to ensure smooth budgeting. Stimulus-related payments are not automatically connected to this change. While previous emergency relief programs were distributed through Social Security systems, the new law specifically addresses routine benefit scheduling rather than emergency stimulus disbursements. However, any future federal relief programs would likely use the updated scheduling infrastructure now being implemented. Seniors who rely on joint household income, where one spouse receives retirement benefits and another receives SSI or SSDI, should pay special attention to overlapping deposit days. The updated system may slightly separate deposits that previously arrived on the same day. While this does not reduce total household income, it may alter short-term cash flow timing. Understanding why this change feels sudden requires looking at how payment systems have evolved over the last decade. Electronic deposits have become the primary distribution method for Social Security benefits. Nearly all recipients now receive payments through direct deposit or government-issued debit cards. As electronic payment volumes have grown, so has the complexity of managing national distribution cycles that involve millions of simultaneous transactions. Federal officials have confirmed that certain peak volume days created strain within interbank transfer networks, particularly during months that included national holidays or end-of-quarter processing spikes. The new law addresses these concerns by adjusting processing windows before funds are released. Instead of concentrating nearly all payments on traditional Wednesday cycles without flexibility, back-end scheduling now staggers transaction authorizations to reduce systemic stress. Beneficiaries may not see dramatic visible changes each month, but during specific calendar alignments. Deposit timing could move by 1 to 3 business days depending on federal banking operations. It is important to emphasize that benefit eligibility rules are unchanged. Retirement age qualifications, earnings tests, disability review schedules, and income thresholds for supplemental security income remain governed by existing federal statutes. The only modification involves administrative timing of when funds are electronically released. This distinction matters because many rumors have circulated suggesting that payment date changes signal deeper benefit reductions. Federal authorities have clarified that this is not the case for seniors living in states with additional state-level supplements. Coordination between federal and state payment systems may also be adjusted. Some states supplement SSI payments, and these deposits often follow federal disbursement timing. When federal scheduling shifts, state supplements may align accordingly. Beneficiaries should monitor their state-issued benefit notices for confirmation of any minor date changes. Another area of impact involves representative pays. Individuals who manage benefits on behalf of family members must carefully monitor deposit timing to ensure proper distribution of funds for housing, food, and medical expenses. The updated scheduling system aims to provide clearer calendar projections well in advance, allowing pays to plan responsibly. Understanding the difference between payment amount and payment timing helps reduce unnecessary fear. The amount deposited into bank accounts is determined by lifetime earnings records, inflation adjustments, and program eligibility rules. The updated scheduling system simply changes the processing sequence within the federal payment network. That distinction protects beneficiaries from misinformation that could otherwise create panic for households managing multiple benefit streams. Organization becomes even more important. Reviewing bank statements monthly, tracking Medicare deductions, and noting any calendar adjustments ensures financial stability. Communication with financial institutions and service providers adds another layer of protection. The modernization of Social Security payment timing reflects broader shifts in government operations toward digital efficiency. As technology advances, administrative systems must evolve. This law represents one step in that ongoing process. By adapting now, federal agencies position themselves to handle future beneficiary growth without compromising payment security. In closing, the confirmed change to Social Security payment dates represents an administrative modernization effort designed to strengthen system reliability. Benefit amounts remain protected, eligibility rules remain stable, and the core mission of supporting seniors continues. The most important takeaway is preparation and awareness. By staying informed about updated payment calendars and planning monthly budgets accordingly, older adults can maintain confidence and stability despite scheduling adjustments. Social Security remains a foundational support for millions of Americans, and understanding how these changes work ensures that beneficiaries remain empowered, informed, and financially secure moving forward. Board.